It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Wednesday evening, March 2nd, 2016, cruising our way through this first full week of the month of March. We got another exciting newsletter in store for you guys and gals tonight. We got crude, S&P, gold, and euro starting out tonight. Oil is bullish, but hanging by a thread this evening after the sellers failed to reverse the news this morning, which gives the bulls an opportunity to hit some easy targets overhead. But they better not fail. Those bulls better act fast because those sellers are going to be waiting to send price all the way back to the low of day today. How about the E-mini? The S&P is bullish this evening, but the bulls just completed their measured move, and they're just inches away from the highs of a major bull channel. This gives potential for a deep undershoot and a big correction lower before we get another buying opportunity tomorrow. Got a pretty interesting chart on the S&P. We'll take a look at that in a moment. An inverted head and shoulders on the S&P here tonight. We'll look at that in a moment. Gold is bullish, but trading at the highs of a multi-day channel. This tells us to look for buyer failure for a sell off the highs tomorrow on the yellow metal. But we have to wait for the proper trigger for entry. Got a really important strategy, really important plan for all the gold traders out there. We'll talk about that in a moment. And of course, the euro, the 6E is bullish after the sellers tried twice and failed at the range lows. This tells us to look for rotation back to range highs before looking for a sell off the highs tomorrow. Beautiful range rotation on that euro. Hopefully some of you guys were able to catch that earlier on today with us. Now, got a great plan for crude, S&P, gold, euro. Before we jump into charts and check the schedule for tomorrow, I want to remind you the only place to watch the full-length version of this newsletter is on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel right now, there's a link in the description of the YouTube video. Follow that link over to our blog. That way you can watch the entire full-length version and get a coverage on all four markets. While you're here watching the video, don't forget to grab a free pass. Come out and test drive our live trade room as a guest. In the lower left-hand corner, you can register to be a member of our newsletter mailing list. No spam, nothing else besides just nightly newsletter emails. You'll never have to worry about missing another newsletter ever again. I'll shoot you an email every evening when it's ready. Right below the video tonight, you'll see a spot to download all the charts you see me using in tonight's video. And of course, over on the right-hand side, you can join our trial membership. The trial membership is unique because it's going to teach you more about the actual strategies that we use, whereas the free pass is just simply joining us in our trade room as a guest. You can learn more about what it means to be a member, and please don't forget, I've always got someone standing by 24/7, 365 to answer all the questions you guys and gals may have, whether it be charts, data, brokers, whatever the question may be. Hit us up on live support right on the right-hand side of the website. Ready to rock and roll? Helmets on. I hope you're hydrated this evening. We got a busy report. A lot of stuff to talk about tonight. Before we jump into charts, though, let's make sure we check tomorrow's news over on the Econo Day website. Let's grab Thursday, March 3rd. Now, of course, we got news tomorrow morning, jobless claims and productivity and costs, factory orders. Those are going to be the big blocks of news at 8:30 and 10 a.m. tomorrow morning. We're obviously now, of course, also keeping our eyes open tomorrow afternoon ahead of that employment situation. Right, so we'll go over this in a second here. First of all, jobless claims at 8:30 tomorrow morning. 8:25, my alarm goes off. I'm sitting on hands 5 minutes before the news, 5 minutes after the news, or until you see price action calm down. Factory orders, ISM non-manufacturing tomorrow morning at 10 a.m. Those are the two big blocks of news, 8:30 and 10. Love seeing news at 8:30 and 10. That means we should get the market moving quickly early in the session for us, and then give us something to look forward to at the end of the morning session. Now, talking about Friday's employment number, right, non-farm payrolls, don't forget, afternoon on Thursday, after 11:30 on Thursday, ahead of non-farm Friday, usually things start getting a little bit slow. So keep an eye on the price action. I always tell my students, afternoon trading is always going to be considered lower reliability. In the morning session, better volume. It's that overlap between London and US, between 7 o'clock and 11:30 a.m. Eastern time. That's where you're going to get all the good stuff. That's where the most reliable price action comes. You're more than welcome to leave positions open tomorrow afternoon, but you're probably going to see as we get closer and closer to that employment number on 8:30 on Friday morning, you're going to start seeing some of the bigger players exit the market just because they won't be able to hold positions right into the overnight session because tomorrow morning's news or Friday morning's news is so unpredictable. The moral of the story is tomorrow morning, get ready for news at 8:30 and 10 o'clock. And then again, be careful tomorrow afternoon. Volume will likely drop. Market will be very illiquid, and that'll be because all the big elephants will have left the room ahead of the employment number on Friday. We'll talk more about the employment situation report and how we're going to trade that in tomorrow night's newsletter, so make sure you guys come back and join me for that. Jumping in here this morning, or this evening I should say, looking at crude oil, then we'll go to the S&P, gold, and wrap up on the euro. Crude oil is bullish but hanging by a thread this evening after the sellers failed to reverse the news, which gives the bulls an opportunity to hit some targets overhead, but they better not fail because sellers will be waiting to send this price right back to that 33.5 area where we started the day today. We have a trading range, a bull channel, inventory news, and a measured move to work with this evening. The trading range tells us to expect rotation from high to low using the 2-try rule, with the next level being at 35.02. The trading range, you can see at the bottom, we have that marked up, right? Mark up your range expansions. You can see we rotated from the range expansion down back to the high of the range. This is where, of course, the sellers tried to take it lower. We'll talk about that in a moment. And now we expect rotation right up towards the 35.02. If they fail to get to 35.02, give them 2 tries. We're headed back to 33.56. Once again, rotate from the low up to the high. They blew right through the high up to the next level. That's expected. Once they get to that next level, the next rotation level is back at 34.29, right? Give them 2 tries now. They double bottomed here, so this will be the first shot, right? So first try, second try, they need to get within 2 tries up to 35.02, and this is what the sellers are watching for. If they can't get up to 35.02, now it's likely, right, we make a move back to 34.09 on our way back to 33.56. Okay, that's what the trading range tells us. Next up here, let's see here. The bull channel can be used as support, right? The next piece of this puzzle is going to be the bull channel. As you can see here, we have rotation from the high down to the low, up to the high, down to the low. Now, this is a very important area for this channel. If we stay above this trend line, right, it acts as support. But remember, one of the easiest ways to grab a reversal when the market's trending is to look for rotation to slip below the low of that channel, and then you can use that channel low as resistance, right? So you have to assume that's what the bulls are trying to avoid. They're trying to keep that price, right, above that low so it can finish that job. This is just another one of those reasons why I'm kind of commenting that the buyers have a chance right here, but they better do it quick. If they can't get away from the low of that channel, right, of course the objective now is to get it back up to that high, right, and then two-legged correction and try to finish off the rotation, right, all the way up. Again, I think the whole variable right now is going to be, can they keep it above the low of that channel, right? Can they keep it above the low of that channel? You can kind of see that's exactly what's kind of getting in the way right now. The bull channel tells us the buyers have it, right? The bull channel tells us the buyers are definitely interested, and they're going to be buying off the low of this channel. But again, you can definitely see the sellers were successful at getting it below below that channel. It looks like they might have won the battle right there. But again, we're going to see that in the next few hours once this market opens back up again. Now, third piece of this puzzle, the move off the inventory news tells us the buyers took control, and we see the sellers tried really hard to reverse the move, but they clearly failed. Also, their stops are now likely to be sitting up at those news highs, which means the bulls have a window to run this higher, but they better do it fast before this move, quote unquote, runs out of gas. As you can see here, we got, sorry about that, wrong button. As you can see here, I have the news marked up, right? News comes out at 10:30, sends that price higher. Actually, the news came out right about here, sent the price lower, was bought right up, right? You can imagine, it's amazing though how these ranges work, even in the face of news, right? Ranges do work very, very well. So bottom line is, we have the 10:30 news shoots this price higher. Now remember, a big move higher is wonderful, but you got to hold the pullback if you want me to take it seriously, right? Big pops often equal big drops. If the buyers wanted it, they had to hold off the sellers. They didn't get the pullback here, which is not surprising because it's a strong move, right? Buyers aren't going to be interested in buying the pullback of the moving average. They're going to want to see a deeper correction, right? They corrected back. You can see the bulls clearly wanted it, right? They held the pullback at the high of that range. And then what I think is the most important thing is the seller's response. The seller's response was a higher low. They really tried. You can see it, but the bulls have, for now, right, they've held it. Now, here's what I see this tells me. Put it in context. We're coming off the range rotation. We're coming off the low of the channel, right? And it appears with that higher low, it appears the sellers, first of all, have been beat. It's tough to say beat, but it looks like the sellers kind of gave up temporarily. That gives these buyers a chance now to run back to the high, right? That's their window right now. They've got to get it back to the high. Because the second piece of this puzzle is I want you to think about how a seller would be treating this right now. Let's say that you didn't buy into it, right? But you looked for buyer failure here and you sold it. Where would your stop be right now? The big sellers are going to have the stops waiting right up around 35.17. Now, here's what oftentimes happens. When people fade the news like that, they put their stop up above that high. Right? And they look at what happens afterwards, right? So it comes down. They're looking for sellers right now to get them out of that move, right? They're looking for sellers to finish that job. When they see the sellers get a higher low, when they see the buyers get a higher low, every one of those sellers with their stops sitting up here now should be very, very worried. Most of them are going to exit a portion of their position about halfway back. The rest of them are going to leave their other stops, right, their other half of their position, sitting at the high. And usually what happens is, if it was me selling off that high, I already know I'm wrong, right? I already know I'm wrong. What I'm going to do is I'm going to look for a chance to get out, right? I'm looking for a chance to get out as close to my point of entry as possible. So the average entry price is probably going to be somewhere right about here. Now, picture yourself as a seller. You know you're wrong. Right? You see the higher low, you know you're wrong, and now you're just hoping that it turns around. Where are you going to start getting out? You're going to start getting out once it comes back towards your point of entry, right? And again, we assume some sellers entered here, some entered probably right at the high, right, because it was a resistance area. So how do you get out of a trade if you're a seller? You buy. So what's likely to happen is we're likely going to see, again, scenario one, price goes back up to test the highs. All the sellers' stops are waiting. What will that do? It's not going to sell off. It's going to push a little bit through it most likely. So expect another higher high, right? A push higher. But this is where we can now take the inventory news move and double it up and look for resistance at 35.40. So scenario one, the sellers get what they want and price collapses, right? We talked about that already. Use the low of that channel, okay? Sellers need to see this market go quickly. If they don't, they're going to start exiting their positions because they're about to get stopped out of this move. If they do wait to get stopped out, it's not just going to turn around, at least not likely, turn around right at the high. It's probably going to shoot through that high. When we shoot through that high, every smart seller now is likely going to be waiting for a buyer failure, possibly a double top, to try it again. In other words, I'm going to double down, right? I gave it a shot here. If I'm wrong, I can always get back in again, right? That'll average my position. No harm done, and I'll try it again. If they fail that time, 2 tries. Human beings try twice. If they fail that second time, you're probably going to see it run pretty aggressively up to that 36 area, 35.85, 35.99. So a very interesting scenario. We assume there are buyers who bought the pullback off that news. They're trying to get up to that high, and they're trying to get up to that news double up. We also assume there are some smart sellers here who faded that news, right? Their average entry is probably somewhere around right in here. That tells me that they knew they were wrong when they saw that higher low. They probably get out of a portion of their position, but they're probably going to wait and see what happens next. If they do get stopped out, expect it to push higher. Expect the residual buyers to try to run it up again, look for a double top, and then look for the collapse off that high. If they don't get the collapse, though, and it runs, you know where it's going, right? It's going to basically cause all the sellers to quit selling and start buying, because now they know they tried once, they failed, they tried again, they're not going to try a third time. In fact, they're probably going to reverse their positions. That's what I would do. I would say, I'll give it 2 tries, send it back.